All right. Welcome back to another episode of Token Narratives. This is the 71st consecutive episode without break. I'm Graham Stone, joined by news and research gigabrain David Sensel. Bitcoin's trading at around $117,000. Let's get into the gut check, David. What do you think?
Well, I mean, obviously, Graham, with the price going up, I feel really good about the market.
Funny
And
how that works.
if you look at crypto Twitter, which I think for the past week or two has been pretty bearish, right? People calling for the top, and some accounts that I follow being like, "Yep, this is something to be worried about. We got to pay attention to this." And then now the price is going up and certain coins are starting to run a little bit, and everything looks really awesome now. And this is the future of finance again, dude. So jokes aside, though, like I've been saying, like we've been saying for it feels like 18 months now, 16 months, something like that. As long as this podcast has been going on, everything mid to long term still looks very, very bullish. And the current local short term price action aside, yeah, I think we're gearing up for a great Q4. And I think the interesting thing will be what happens going into Q1 of next year, right? So anyway, Q4 looks great. I would say let me get your thoughts too there. What do you think?
Yeah, same. I keep hearing about like the global liquidity indexes, and we sort of everyone's pointing to around 6 months from now being give or take when this cycle will peak, but you have to keep your eye on it.
Yeah, I mean, I think the global liquidity cycle is important, but it's also incredibly sensitive to uh, governments, right? And so, if Arthur Hayes is right, and the Republican Party in the U.S. Kind of want to put its thumb on the scale to make sure that the economy is really, really awesome for next year and the next 2 years, frankly. You could see a waning liquidity cycle, right? Like it's starting to trend down. It can just get juiced up very easily by fiscal printing, which is way, way, way more powerful than the monetary printing, like quantitative easing. So again, I think you just have to kind of stay nimble, be aware of. Unfortunately, you have to be aware a little bit of politics now. You can't step outside of that. I think I said this in a newsletter, I don't know, about a month ago. About there was this really great post from a financial guy, traditional finance guy, and he made like this long joke post, but it was kind of true about what his day looks like. And it's like, wake up, see if Trump tweeted anything, go into my first meeting, cancel the meeting early because Trump tweeted or posted truthed, and so basically these kinds of things now are very, very important, right? And they have large ramifications for assets, especially like risk assets.
Yeah. And speaking of government involvement, regulation, the SEC has greenlighted generic listing standards, which apparently means crypto ETFs are about to explode.
Yeah. So up to this point, right, like the process was quite onerous. It was almost on a case by case basis, basically. And I mean, yeah, obviously there's only two classes of crypto assets in the U.S., Bitcoin and Ethereum, and both were fraught. This apparently kind of paves the way for systematic listings.
Yeah, Bloomberg ETF analyst James Seyfart, he wrote, "Wow, the SEC has approved generic listing standards for commodity-based trust shares, aka includes crypto ETPs, that's exchange traded products. This is the crypto ETP framework we've been waiting for. Get ready for a wave of spot crypto ETP launches in coming weeks and months." So basically, it seems like you just need to have a futures contract trading on a regulated exchange for 6 months, and then you're basically rubber stamped to get a crypto ETF.
It's pretty crazy, man. Especially when you consider like the past, I don't know, 4 5 years. Certainly, almost as long as I can remember being in crypto, the just the process of or just like the what's it called, the imagining of this scenario where digital assets could get spot ETF products has been around for so long as a dream, and here it is. So again, like I said, that's really bullish, and I think you've just brought up another piece that makes potentially makes me very bullish. This is,
Yeah.
um, go ahead. You want to explain this?
Well, I mean, the Federal Reserve, the FOMC, they got up there and they whatever they do, they burn some incense and
Cut a chicken head.
depending on the way yeah, and the way the smoke blew up, that determined what the policy is here. So they cut the benchmark by 25 bips, so a quarter of a percentage point. And this is the first rate cut since December. So immediately when that happened, Bitcoin dipped almost 115K, and the stock market also seemed to have a delayed reaction, or an immediate down followed by up. So we're now, as mentioned, above 117K on Bitcoin, and the stock markets are pushing all-time highs once again. So the market's interpreting this as bullish. And then, as you've noted here, David, from Merlin the trader, he's posted this chart, which just notes that after a rate cut, the price of Bitcoin tends to pump. So
Yeah,
he's got this on the left, a rate cut from September 2024. Shortly thereafter, Bitcoin went from around 54K to over 100K.
good
And
lord.
now we've got the rate cut. We're trading at 117. Yeah.
Yeah, I would also note though that to me the fact that it's September is important because there is also this kind of seasonality thing involved. I think Q4 tends to be a pretty good time for Bitcoin and crypto. So um, it just adds further anecdotal evidence, or like kind of not not exactly, um, what's it called? It's not rigorous, but again, it does seem to lend credence to the fact that we could be in for a good Q4. Um, as an aside, Graham, I was really surprised to hear you say bips. I swear there is a video of you on Token Narratives saying some point, "I hate people who say bips. That's a ridiculous thing to say."
Yeah. No,
So,
I said it ironically.
oh, okay, I
Didn't you
see.
notice that?
I no, yeah,
Did you see
I
the
didn't.
smirk on my face when I said it?
Well,
25
yeah.
bips.
I also thought it could be just you're proud of yourself for using the financial lingo, bro.
All right, speaking of financial lingo, let's get into Bianco research, Jim Bianco's deeper take on what this all means. David, could you explain what this guy's even talking about? There's a lot of words here. Something about
So
dot plots, and I don't know.
yeah, so I
Go
mean,
ahead.
I think the overall message of this post is just that the the composition of the FOMC, you basically have the what's it called? You have Powell, and then you have all these other governors, I think is what they're called. And ostensibly on the surface, it matters kind of in a democratic way what the composition of the vote is, but in actuality, it only matters what Powell wants, right? And so, um, but the what how the whole group votes can make markets feel confident or not confident. So you have kind of these two dynamics. Number one, just on a pure like uh, what's it called, decision making process. It's basically controlled by one individual. But then um, if there's conflict within this group of governors, that can make markets skittish or it can make them feel very comfortable. And so it's very, very, very rare for the FOMC members to disagree, at least publicly, right? Like you had to have the votes kind of be split in any meaningful way. Anyway, so that's all to set up what Bianco is saying here. This really does look like the FOMC doesn't really know what they're doing, and people wildly disagree. Now, the actual vote, the top line vote was, I think, 11-1 in favor of the basis cut. Even that alone, 11-1, shows you that there's a lack of confidence, because usually there's a unanimous vote one way or another, and then maybe in some of their opinions, the people who wanted to dissent give some opinions and be like, I didn't really think this was a good idea. Anyway, so you have 11-1 vote, but then also they release these dot plots, which is what each person thinks their prediction for where interest rates are going to go in the future, right? As in, like, are there going to be more cuts this year? Are there going to be less cuts? Is it going to remain flat, or are there actually going to be hikes? And this is another way for these individuals to signal to the markets where they want things to go or where they think they will go. And usually these dot plots are fairly consensus in terms of they all kind of crowd around the same projections. This is not the case for this, right? So I'll just reading a little bit from what Bianco is saying. One member of the FOMC thinks the Fed is going to hike rates this year. One member thinks it's going to cut 1.25%, 125 basis points this year. 5 cuts over 2 meetings.
That's 125 bips.
Damn, you sound so cool. And so the overall feeling from this is that while on the surface there's consensus, it shows that the FOMC is deeply divided and they really don't agree on what the future path of this. And that should make market participants a little fearful, because that's uncertainty, right? You're basically showing that there's this kind of like baked in uncertainty. So that's one part. And then the other part is Powell using this term risk management, to describe why there was this cut. So I think it was at Jackson Hole, he said that we're going to be, what did he say? We're going to be
data dependent.
Data dependent, right? We're going to go back to being data dependent. Well, now a short time later, we're talking about risk management, right? This is why we're doing this cut, risk management. And it's kind of, again, showing some inconsistency within the FOMC. They don't really know or aren't sure what's going to happen next. Again, this should make markets feel like there's less certainty. And risk management is kind of like a hand wavy thing. It doesn't really mean anything. It's seemingly. And so the Bianco thinks that this is basically Powell giving Trump what he wants, which is a rate cut. Powell doesn't think there's any good reason to have a rate cut, and so the reasoning he's providing is risk management, right? Which is just this kind of ambivalent term. And so that's, again, the overall message, I guess you could say. I haven't been very clear with this. Is just kind of uncertain.
So maybe you could argue that Jay Powell is kind of signaling to his base, or like whatever, like, because he's anti-Trump, right? He's like, the whole thing is so politicized. He's kind of
Yeah.
signaling that, yeah, I'm doing this, but it's only because Trump made me.
Yeah, I mean, I think I think we talked right after Jackson Hole, and I honestly, you know what, I wasn't a Powell believer um, during the COVID times, because I thought he was not going to be able to do what it turns out he was able to do. But I really do think he is really really good, uh, and I am what I think he's doing here is he wants there to be this consistency between himself and then the next chair, and so he could stick to his what he thinks, Marcus, he could stick to what he thinks should be done, but then there isn't this kind of linear consistency with the next person, and so my guess is that having that kind of like transition is important, and maybe
Yeah.
is having an impact on what he's doing.
Yeah. I don't know. I mean, I'm so skeptical and cynical about this whole thing. Have you read or heard of the book Princes of the Yen by Richard Werner?
Oh yeah, I got into this during COVID. I've seen
Yeah.
like, I don't know, 10 hours of him speaking on this stuff.
So this guy basically thinks that Jay Powell and kind of all heads of these types of bodies, whether it's like central banks or the FOMC, they are all basically captured. They're like kind of CIA assets. I think he would actually go that. He claims to have been threatened by the CIA for exposing that like these guys are all just like playing some kind of, I don't know, Illuminati game here. And basically Jay Powell, the only reason he's the head of the FOMC is because he has just from the start like played ball, done what the policy is, right? And I don't know, like,
I don't
does
think
this
that's
even
true though.
matter anymore? No. Okay.
Well, no, I mean, just Powell. I mean, for the past since I was following Powell closely for the, what's it called, throughout the COVID crisis, and um, you know, that whole thing. He had detractors on all sides, like all sides. So I don't know if he is being controlled, if he is just a pawn. That could be true, honestly. But then whoever's controlling him knows what they're doing, because there was no consensus, and he was catching criticism from everybody, even, and even now, right? Like Trump has just been on him for like a year. So
Yeah.
it could be the case that he's an asset or whatever, but then whoever
Well,
is making those decisions has made really good decisions, I think.
either way, the market definitely reacts to whatever the Fed implies it's going to do or does do. And in this case, the market seems to be interpreting it as risk on. Um, although I don't know how relevant this is, but you got Peter Schiff. As I warned, now that the Fed has cut short-term rates by 25 basis points, he prefers basis points to bips. Long-term rates are rising. The yield on the 10-year Treasury is back to 4.14%. It was down to 4.02 the day prior to the rate cut. I think yields are headed back up to 5%, and the Fed's going to restart quantitative easing.
I mean, so there's a couple things here. I've listened to, I've been paying attention to this Treasury 10-year Treasury thing for for a while, and I don't know if you recall, but like 6 months ago, everybody was saying dollar's done, and the solvency of the U.S. is in question. Nobody wants U.S. Treasury bonds. 10 years going to 5 and 6%. And during that time, it's gone down, right? So this whole time, people have been talking about how U.S. Treasuries are no longer a safe haven. Sovereign bonds in general are trash. Buy gold, buy Bitcoin. But treasuries have gone down during this time, and all those people who were kind of saying it should be at 5 or 6 soon, they don't really have a good argument for that in terms of why during this time did they go down. So yeah, short-term reaction, Schiff is right. So they've gone up a little bit, but it's still yet to be seen if you actually have this kind of long-term trend where treasuries are going to rise again. I would also put in, though, that some of the people that I pay attention to, they think that the economy is, we talked about this last week, but there's others too, right? Like who's that forward guidance guy, Blockworks Forward Guidance, great guy. What's his name? I can't remember. Anyway, he's been on this thing,
Canadian guy.
Yeah. And I think I agree with him, which is the economy is there's signs that the economy is heating up, right? And so I would honestly say that this rate cut is maybe much like, to your point earlier, is much less important than the fact that the economy it's not slowing down, it's actually heating up. We're on an upward trajectory, and that is more of the reason why we're going to see assets perform well going forward. The rate cuts are a tailwind, but they're not really. Maybe they're less material than people think, right?
Yeah. There was an interesting post from Julian Biddle. Let me bring it up. That might be relevant here. All right, so he goes into some detail. Unemployment keeps grinding higher. Hold on. All right, let's look at, was it this chart? This chart? Weekly overtime hours worked composite index. So he's basically saying we're nowhere near a recession. The recessions are marked with these purple highlights. And when overtime hours worked in the US starts to like drop off a cliff, that's when a recession happens. And right now, overtime hours worked are on an uptrend. I don't know. It's an interesting little data point.
Yeah. So, I mean, the Fed, the rate cuts.
He also dropped in this chart, the GMI Bitcoin cycle top finder, which so shows that currently Bitcoin is nowhere near the cycle top. You've got these like big peaks in 2021 and 2017, and we're like not even halfway. We're just sort of grinding up slowly.
Yeah.
This is a proprietary data point or metric that like integrates many metrics that I don't know what they are, but anyway, it's interesting. All right, should we get into a little pump fun chaos?
Oh yeah. Do you have bags? Let's start with that. Do you have bags, Graham?
Yeah, I have a bag. I bought a little bit, and then it went down, and I was thinking, okay, good I didn't buy my whole bag. Now that it's going down, I can like try to scoop up some more, but then I just got busy and didn't, and then it like 2x'd. So I'm kind of I can't complain, but I didn't get as big of a bag as I wanted to, and I'm not buying now. I'm not buying more now.
Yeah,
Yeah,
I got a decent sized bag, but I also, it's the kind of thing where now um, it's performed so well that yeah, I really wish I had gotten more of it,
yeah.
more of Pump and less of World Liberty Financial. That's currently what that's currently how I feel.
Yeah,
But okay, yeah,
how's that doing? I haven't checked in on the
I think my bag is down like 20% still, 18 to 20%. I think it'll eventually run, but I think Pump is it's got much more
pretty flat.
narrative momentum. Yeah, Pump has got much more narrative momentum, and I think Pump. Well, we can get into it. We can get all into it, but so Pump, I think is the team. Um, it took uh, like a month off after the ICO, right? So they did all this effort to do the ICO, and then it was wildly successful, and then they kind of stepped back and maybe took a deep breath to kind of uh, figure out what the heck they were going to do next. And during that time, the price action just went down, right? Because they weren't doing anything. But now they are starting to do stuff, and they must have a game plan, and they're deploying capital, and you're starting to see the price. Obviously, you've seen the price kind of respond to that. Um, do you want to start with this stat here?
Yeah, well, Pump from their account posted their daily active users on the pump.fun mobile app, which I think we can get into how that all works. But as you can see, it's kind of 10x here. It's been on a steady grind for the last couple months, and then very recently 10x. Now, this analysis from the bot, from the agent AIXBT, streamers, pump.fun streamers extract $161 per viewer in trading fees. This guy called Ted Czar made 258K from 1,600 viewers. Bagwork, you saw the Bagwork
I did.
crew, right? They were pulling pranks to go viral. They pulled in 99K from maybe 80 people watching.
It's crazy.
Supposedly the platform pays out 3.1 million daily to creators from just 10,000 total viewers. So that's $310 per viewer per day across the platform.
Is
No
that
streaming platform.
Is that through pump tokens?
Creator tokens. So, yeah, let me just finish this. No streaming platform in history achieved this extraction rate. Twitch creators make $0.003, so a third of a penny per viewer hour. Pump creators make 100,000 x that because viewers aren't watching content, they're gambling on tokens. So I think the way this is calculated is you how it works, right? How the whole pump.fun app streaming thing works. You launch a token and then stream. And people bet on your token based on like what you're streaming on. And when the token goes up in price, you as the person who launched it, the creator, you get tons of fees from, and you can hold the token. So the way they're calculating this money earned per viewer is just like hardly anyone's actually watching this, but the people who are launching these tokens are cashing in massively. So you just it's a simple calculation of like money made versus viewers, and it looks insanely profitable. Of course, what you actually have to do in order to get attention on this
Well, hold
platform.
on before we move on.
Yeah.
So they're getting a cut of the revenue from the tokens trading, right? So
Yes.
they're getting that in USDC, or are they getting that in pump tokens? I'm just trying to figure out what the fees are in. Are they getting just like straight up stables, or are they getting dilutive
I don't know, but
coins? Okay.
I would imagine it's in pump tokens. So
Interesting.
what people have to do to get attention on the platform. This happened a year ago and it disappeared out of controversy. I don't like people were like,
Yeah,
because
they
there
turned
were
it off.
people
They turned it off.
shooting chickens. They turned it off. So I guess now that like crime is okay or whatever, uh, they've turned it back on. And you've got Bitlord here. Pump is 100% a scam. Honestly, this site is cooked. I just got rugged by a disabled dev. Said he had 120 hours to live and fees went to his family. Claimed he didn't know what a rug was. Then he clipped us and went offline. Lol, respect. I'm not sure if this is parody. And there's a picture of a seemingly disabled person.
Yeah. I need to get more into this. I haven't really seen how this is different from what it was before. Um, it just seems kind of the same thing, maybe repackaged as Pump was before, but these are like streamer tokens. I mean, that doesn't make any sense to me in terms of how it's differentiated from like the whatever dog piss tokens that they were doing before, and you had like a guy in a dog mask drinking pee.
Yeah,
So
I think we should dig into it more, but I don't think there is a difference. It's just that now that crime is legal, it's back. So yeah, here's some highlights, recent pump fund streams. There's the bag work guy purposely getting slapped hard by some influencer. Guy jumping into a river, launching a. Okay, this guy's back. Shitcoin. He launched shitcoin and promising not to leave until it leave the toilet until it hit 80K market, 80 million K, and he rugged back then. He apparently rugged again. Yeah, it goes on.
yeah, this is dark to me, man. I'm a boomer. I do not like this. This is nasty stuff, man. It's just
Streamer
this
tapes
is,
herself to the wall during
this
stream.
is bottom of the barrel humanity. Uh, Hate it. Not a fan.
So should we actually just be doing token narratives from the Pump Fund platform?
Honestly, I was thinking about that. I was thinking that we should honestly like at least try it out, because we're just sitting here disparaging it, but um, it would be like a fun experiment just to see how this stuff actually works.
Yeah.
But I don't know. It has no interest for me whatsoever. Um, the more interesting thing that I saw were this kind of dark stuff that you're showing. Just makes me not want to try it at all. And but you saw like some of the I saw some of the, like the more kind of like legit accounts who are looking for so-called value or whatnot, talking about how this new wrinkle is going to you're going to see like a migration from Twitch and whatever YouTube Live or whatever it's called to Pump.Fund because of the much higher payouts to legit streamers. I guess that's going to happen, maybe, but this just does. I'm going to have to figure out what the tokenomics is or how this actually works. But
Yeah.
it doesn't seem. It just seems super like scammy so far. I don't.
Doesn't seem
I don't get it.
sustainable. I mean, like you just have to have it seems like you just have to have a gimmick, and it's just a one-time thing. So if you're like trying to create a sustainable channel, maybe there's a way to do that. Um,
But
yeah,
why,
we should
like,
look into it some
yeah,
more.
yeah. I mean, if there's like a legit way where a streamer, like a, let's just take ourselves for example. We're not streamers, but if you have something and like I guess you're trying to, it's that classic crypto. It's almost too idealistic, right? I'm trying to build an audience, Graham, and share in the what's it called, the wealth that the audience, building an audience makes. Um, but we just saw that, like, last cycle, and how badly that failed. Like, not to pick on Bankless, but they have, like, they launched a coin, right? Their Bankless coin, which just turned out to be kind of like a rug-ish kind of thing, right? How is this different from that? I don't understand.
Yeah. Well, there might be a way that it makes sense.
I do have a
All right.
happy bag of pump, and I'm not gonna sell it anytime soon. I think it's gonna go up a lot. I think if they, especially if they keep buying back as much as they are. What is this? The stat here: Pump.fund has bought back more than 5% of the circulating supply so far, um, with about 4% of that happening in the past month alone. And because of all this attention, it's generating high revenue once again. This also seems like it will only increase, at least in the short term. So,
Yeah.
and you get like the flywheel, right? Like, as the
Yeah.
price goes up, and it's gone up a lot, it's going to go up more. So I do think
That's
that
right.
this has got a lot of legs under it,
And back
even though
when
I don't understand.
another point to add is that back when Pump was doing its ICO, there was a lot of FUD about its competitors like Let's Bonk. But last stat I saw was that Pump is back up to like 95% market dominance in the meme coin launchpad space, and Let's Bonk. Their rise was short lived, and it was just driven by the incentives that they had at that time. So the pump moat does seem to be still in place. So it's the go-to place to launch your degenerate meme coin,
The
and
Yeah, it's the
degeneracy
go-to place.
reigns. So
It's the good. It's the go-to place to make boomers like me feel bad about the path of humanity and youth. But
I feel
one
bad
one more.
about it, but I also just feel bad because I'm not cashing in. So
Become a streamer, Graham. Just get on there a couple hours a day, drink some dog pee. You're good to go. One last thing. One last thing that's kind of a tailwind as well is, this does seem to be like Solana season, right? I wrote about this in my newsletter. Um, Solana is kind of in the limelight at the moment. You have that $1 billion digital asset treasury. What was it called? Forward something. I'm tired.
yeah,
Um,
yeah,
they bought a lot of Solana, more than $1 billion. Forward Industries, and they have a they have a good spokesperson, potential spokesperson, and Kyle Salami, purposely mispronounced, the old Salami. So maybe they have their Tom Lee now, and uh, with this announcement of the ETF, systematic ETFs now, Solana spot ETFs have got to be days away from launching in the US, right? Like, it's maybe a week max, 2 weeks, if that. But all of that seems to be, um, you're going to see some good Solana price action, and then Pump being on Solana, definitely beta to that. So you could really see Pump do well here in the short to medium term.
yeah. So the Soul chart looking pretty good, I guess. It's got to break through to a new all-time high, and then you could see a pretty decent price discovery move
Oh
there.
yeah, Yeah. I think that's going to be inevitable. I mean, you and I are very familiar with the Solana community. They are they really know how to support the Solana community. So, I mean, I've already started to see it kind of uh, pick up on my timeline, right? The Solana cheerleading. So I imagine that once we hit all time highs and get into some price discovery, it'll only ramp up from there. And I'm all for it. I have soul bags. I know you have big soul bags too. So uh,
Allegedly.
allegedly, right? Exactly.
All
But
right.
yeah, pump.
All right, pump. Yeah. So what about you guys want to talk about Gemini? May not have time to get into all these things. Gemini or the ETH execute debate.
The
Which
ETH
one do you want to do
execute debate
first?
is a fun one, but we can just mention the Gemini IPO, right? We're just in brief. You're seeing, as we've talked about before on this program, you're seeing the crypto darlings um, release traditional financial equity products, stocks, and Gemini is like the latest one. They launched, and they have, I think, done pretty well, especially if you kind of were an insider, right? The the IPO was heavily oversubscribed, so lots of investor interest on that side, um, and the price action apparently has been kind of volatile up to now, but I think anyone who got in early, especially in the insider rounds, they're happy with it. And this is it's a trend. We have, what is it? Bullish went earlier, Circle, Gemini now. Um, 2026, I think you're just going to see a deluge of crypto companies IPO, right?
Yeah. Speaking of people cashing in, did you want to comment on the rumors around the exploration of a base token, a token for the Coinbase
Yeah, I
chain
mean,
base?
uh, yeah. So it's kind of like if it's not a cliche, it should be. But in crypto, the line of just like vociferously denying that you're going to have a token over and over again, not going to have a token. Um, in Base's case, their reason was because we're Ethereum aligned, Graham. We're going to use ETH. We want
Yeah.
ETH to do well, and if ETH does well, then Base does really well. So got to have that Ethereum alignment. After all, we're an Ethereum L2. By the way, they've
Yeah. I
also
don't
said we're
think
going to always be an L2. We're always going to be an L2.
Yeah, I don't think anyone actually believed that they wouldn't launch a token. I think from the minute the base chain was launched, everyone just assumed that a token was coming and that any denials were just posturing.
Well, now
So
they're
sure enough,
exploring it.
that yeah.
And obviously,
All right.
Ethereum
Yeah.
people are upset about that. But what are you going to do? They're going to have a token, and
Yeah. Let's
honestly, why would they even stay in L2? Right? They're yeah, no. We'll see about that.
All right. Well, let's not speculate too much on it. I was getting my next question was going to be, is it a buy when the base token launches? But then you have to look. There's going to be a lot of factors to look at, like what the allocation is, what they talk about in terms of what the actual utility for the token is, which I can't really fathom what it could be used for.
No utility. I
Um,
mean, they could do like the smart play to do would be jump on the narrative revenue bandwagon and guarantee that some percentage of network fees or something like that goes to buying back and burning the token, right? So you jump on the revenue narrative.
yeah. So yeah, potentially that is a buy, I think, just because of how massive Coinbase is and their distribution and their, quite frankly, their history of like excellent execution. So you have to look at the details again of the tokenomics and how the whole thing's set up. But probably there's just going to be so much hype about it that I think that probably would. And then, how is it valued when they are like, what is the
Yeah,
pre-market?
that's
All those things are factors. But I've heard people say that if this thing were to launch today, it would probably be 10, 20 billion market cap from day one.
yeah. And I mean that the last point I think is the most important is
Yeah.
what do they launch what do they launch it at? Right? Like if it's at like
Yeah.
10 billion, I think I would have a hard time buying that.
Yeah.
Whatever that like the token price at 10 billion. I don't
Yeah.
think I would participate, but
All right. So Bear Base is going to be having a token. Is that undeniably bearish for Ethereum?
well, I mean, that was the funny thing to see the contortions on the timeline from Ethereum people making it so that it was either not very bearish, neutral, or bullish. So I personally think it's it's to me it's almost like neutral to slightly bearish because every other L2 basically has a token, and so that's kind of the standard, the normal thing to do.
Mm,
So
yeah.
I don't think I think it would be hard to say that it's overly bearish, right? Because it's
Yeah.
already what we do. What do you think?
Yeah. I don't really have anything profound to say there. What you said makes sense. But I do want to keep dunking on Ethereum. So let's talk about the validator exit queue swelling 188% since mid-August. So okay, what is the so when you stake Ethereum, when you go to unstake it, there's a queue. And there's like the way the system is set up, it's only they're only allowed to unstake a certain amount per day. Is that it? Or per epoch?
Yeah. So I mean, it's per epic, but what that means is what you just said, right? Like basically per day, there's a top amount, right? There's a they call it a churn limit
Yeah.
of potential unstaking that can occur.
So if a lot of people put in the bid or put in the order to unstake as of their 32 Ethereum, it takes if there's a lot of people doing that, it just takes longer. And right now it's what is it? Weeks? 6 weeks it takes?
45 days.
45.
45
So if you
days.
want to unstake your Ethereum, you got to wait 45 days. That's how big the queue is right now. Supposedly, a big part of this is tied to the security issue relating to Kiln Finance, which is a staking platform. And they suffered a $41 million hack involving Solana. I don't know how the hack was supposedly something on Solana, but like just to be sure, they stopped everything on their Ethereum and they started withdrawing.
Yeah, I
So
think
that's a big
that
reason for the spike.
yeah, and I think they're just being extra cautious that maybe their infrastructure, um, which probably infrastructure or process might have been flawed in some respect. So they're probably just like resetting the some part of that, right? So I think Kiln Finance has said that they're gonna unstake all this and then kind of almost immediately restake it.
Uh-huh. Okay.
And you've seen this,
So,
right? Like it's not just there's not just a queue to exit, there's a queue to enter. And I think right now, if you look at it, the entrance queue is longer now than the exit queue. So just there's more people or more accounts trying to stake Ethereum than there are leaving. So which is crazy to me though that it's going to be 45 days to stake your Ethereum. I don't know.
yeah, actually, this is one of the big sticking points for why the ETH ETF is kind of sub optimal compared to ETH treasury companies. because with the ETF, because of the liquidity requirements that are regulatorily imposed, you basically can't really stake, even if it were illegal. You wouldn't be able to stake anywhere near 100% of the ETH that's held in an ETF. Whereas for the Ethereum digital asset treasury companies, the Ethereum DATs, they don't have those liquidity constraints, so they can stake all the ETH that they hold.
Yeah. And yeah, and that is kind of one of the things that critics have pointed out to this process. So we can get into this debate. And just to frame the debate, it's kind of been the way that this debate has worked out. It's kind of been ETH people versus Solana people. um, and it's been pretty interesting to see this debate unfold over the past several weeks, like a month maybe. But now it's getting to the point where I feel like it was reasonably constructive at the beginning, but now we've gotten to the point where it's just kind of like tribal, right? It's just like if you are pro ETH, then you're pro this kind of exit queue, the status quo, and if you're from Solana, you're against this and say that it's a problem. But I
Yeah, kind
think,
of like if you're Democrat, the economy is not doing well, but if you're a
yeah,
Republican, things
yeah, that's a good way
are great.
to frame it. So the I'm going to break it down to very, very simple, and I could be wrong. If I'm wrong, get in the comments, tag me. But basically, on the pro side, as in the people who support the current implementation and the 45-day wait to exit your exit staking, it basically boils down to kind of two major points. The first is that this is all by design, and it's to prevent various problems and exploits that happen with a queue that's a lot more efficient. So this inefficiency is good, and it's by design. It stops like uh, max exodus of validation, especially during like crises or maybe bad price action. Um, it it stops various or it discourages and or stops various exploitation attacks, both known and unknown. So because the queue is long, if there is some exploit that is able to happen, then the long queue would allow everybody involved to figure out what's going on and or do something about it. So, and then there's I heard this uh, Chesterton's fence argument. Chesterton's fence basically is this kind of way of thinking. What is it? Is it a rhetorical device? No, it's not. Anyway, it's his way of thinking. It basically means something before you tear down or destroy something. You need to make sure you fully understand what it's there for, because it could be doing something that you don't really understand. Right? Like, so you come across a fence in a field. Um, you look around. There doesn't seem to be any reason for a fence to be in this field, but you have to assume that the fence has been put there. Someone has taken the time to build it and maintain it for a reason. You don't just open the gate or break the fence
Yeah,
because
it's to
right.
keep me from selling my ETH bags. Uh, that's why the fence is there.
Yeah.
All right, let's get it to the detractors. What are they saying?
All right. So the cons, again, fairly simple, I would say. Uh, they would say that having such a long queue is it doesn't actually increase security. It actually does the opposite of what some of these design intentions are, right? because if there's a long enough uh, exit queue, it creates more panic or contagion, right? Because you don't want to be in the latter part of the queue. You want to be at the early part, which means that you have this just mad rush to get in, to get out as fast as you can. And so you don't, maybe when there is a problem or you think there's going to be a potential problem, you don't take the time to actually make a deliberate uh, decision. You just go and get out,
Yeah.
and so then it
And
increases
also, if you know that there's the potential for this massive queue, then I think you're just less likely to stake as well. Which again, and the whole purpose of staking is to increase security of the network. So by having this constraint, it might actually yeah decrease the security of the network because people are going to be less likely to want to be like potentially locked in when shit does hit the fan.
Yeah, exactly. And then the second big, so yeah, and then you articulated one before this about traditional finance can't really participate in this because of those requirements, and honestly, even maybe even treasury companies or others just don't want to do it. 45 days is a long time to be able to act. And then the last thing is um, this initial design was well intentioned and it's doing what it's supposed to, but it's suboptimal, as in it can be improved. This is not to say that you need to abandon the whole design and scrap it, but just that there are improvements that can be made on it that can retain all the positive things that it currently does, but also mitigate some of these other problems, which are uh, too long of wait times, right? So, for example, you could have like a logarithmic queue where at the very beginning it ramps up quickly to some setish time. So maybe up to like, I don't know, 15 days or something like that. So it could be 0 and then quickly ramps up to 15 days or whatever limit you want. But then it kind of stays at 15 and then the queue just opens up, and anything at 15 just you all get out at the same time, kind of thing. You know what I'm talking about? So
Yeah, that makes sense.
yeah, yeah, yeah. So anyway, those are the two sides of the debate. Graham, where do you fall?
I don't know. Like I don't understand why it's important. I don't understand enough why it's important to like have a serious opinion on how it should actually be designed. But I do I recognize that like the issues, right, with as I mentioned, the ETF thing. Um, in Solana, you can unstake instantly. Isn't it? It's pretty instant,
Yeah, it's
and
very
that doesn't
fast.
seem to have had any problems, caused any problems. Um, so I'm not sure why there needs to be this like long queue, but again, I don't know. I don't know what the security constraints actually are.
Yeah, I mean, the funny thing is about this debate, which I here's a debate that we can have, a meta debate, is basically you had a lot of people on the Ethereum side saying, um, shut up, stay in your lane. You're not smart enough or know enough about the protocol and about decentralization to have an opinion. So your opinion doesn't matter. Right. So this is what they were saying, right? Like you're unqualified.
Yeah, I actually respect that because like that's what I feel like right now.
Yeah. But then you
I'm not.
have,
Yeah,
then it was funny because you have that. And then like, so I'm not going to pull out any names or anything like that, but Sassel, this is Ethereum guy. So he said this stuff like, oh, you don't know what you're talking about. We're trying to improve it. We have this EIP to do that. Max Resnick, you need to shut up. And then
yeah,
Max
but
was like,
Sassol's not a developer.
yeah, I
Anyway,
mean,
go on. Yeah.
well, and then Max Resident was like, he was like, LOL, the EIP that you just sourced before saying that I don't know what I'm talking about. I co-wrote the white paper behind that EIP before
Yeah,
I left.
exactly.
But he was like, before I left for Solana, right? Because he used to work for, I think, the Ethereum Foundation.
Yeah.
He was like, and then he linked to the paper, and sure enough, his name is, there's 3 names for the white paper, and he's on it. So he's like, I do know what I'm
Yeah.
talking about. What the hell is what do you?
Yeah.
What kind of argumentation is this? My point is that I think what you're saying is true, but then you have like this kind of gatekeeping mechanism. So then you can't
Yeah.
really have debates, right? Like I think it's like, it's also like that. It's the meme, the mid curve meme, right?
Yeah.
Maybe you're a mouth breathing idiot on this subject. I would put myself there, but you're also probably right. Like 45 days too long. Mid curve is like, you don't
Exactly.
understand. You don't understand. This is how we get real decentralization. You're not a dev, so it's beyond your comprehension. And then the devs on the
Yeah.
the super smart people are like, 45 days is too long, right?
Yeah,
Like,
exactly. It's something like
um,
that.
even idiots can have a very a point. So um,
All right.
I thought this debate was funny, and I think both sides have a lot of good points. But it became, the funny thing is, at the very end of this, at the end of this week, the debate just boiled down to Ethereum is more decentralized than Solana, so shut up, Solana. And Solana was like, no, we're actually the real decentralized um, protocol, because people actually use us to do decentralized stuff. And Ethereum is not decentralized because all the activity is on Base. LOL, not decentralized at all. And so you just kind of boils down to this kind of I'm more decentralized than you mudslinging contest, which I thought was funny.
Yeah. Typical tribalism in the crypto space.
Yeah,
So,
pretty
all right, you
hilarious.
want to wrap it up there, David?
Yeah. Let's do it.
All right.
You can give a
So,
shout out to what
yeah,
we're doing
thanks
next
again.
week.
Yeah, thanks, David, for your insights. I'm looking forward to debating with you in the flesh, discussing with you in the flesh, and interviewing a bunch of quite frankly, high level figures in the Bitcoin and crypto space next week at Korea Blockchain Week, where we'll be broadcasting live for 2 days starting Tuesday.
23rd, yeah.
Yeah,
September
Tuesday and Wednesday
23rd.
next week, Korea time. So that's if you're in the US, it's Monday night. We've got a bunch of prizes. We're giving away $2,000 of
I thought it was 1,000.
Bitcoin.
Oh, we gave, nice.
We doubled it. We doubled it to 2,000 of Bitcoin. That's threshold Bitcoin TBTC, which is like a Bitcoin on Ethereum and other chains. And yeah, we're giving away that to the top commenters in the live stream.
As
We'll have
determined
more
by
details
us.
about that, as determined by us, commenters and questioners. So, don't hold back. Like you can make, these guys don't know what they're talking about. That could be the winning comment.
Well,
So,
I mean, maybe the message could be, you don't know what you're talking about, but please say it in a more eloquent or interesting way.
yes, have a good reason for why exactly.
Yeah, I think there've been comments about token narratives before that have been like, you guys are robots, or something like that, or talking about haircuts. I mean,
Yeah,
yeah, all of that stuff is fun.
yeah. So yeah, we got that giveaway. We're also going to be giving away some golden tickets where
Oh
we're
yeah.
just going to be flashing them on the camera, and you can scan the tickets with your Bitcoin.com wallet app and instantly claim some Bitcoin. We got like 100 of those or something where we're giving away over
More
the
than
2 days.
100. Yeah.
Yeah. So yeah, looking forward to it. And yeah, have a great week, everyone. We're out.
Kimchi.